must broaden your view. Yeah, because it helps you to really help you to see a possible way you can lower your risk, negotiate for a very, very low risk. Now imagine we have 19 pips and you 90 pips to that's times 8. But for people, some people will say it is impossible. It is possible because you don't play so smart. It is possible. It is possible. Like gold, only one day alone, gold has moved. Oh boy. This is huge. Which news is this? Today alone. Sorry, I'm going to check. What news is that? That should be a news. 577 pips in a day. Friday. 3 o'clock. Are you sure? Try to check the news to see what. Try to check the news. We have this thing coming up. This thing came up in the morning. CPI from CNI. Then Bank of England Governor Bailey speaks. Then this news is from US. Okay, consumer sentiment. Wow. Consumer sentiment came out 63.0 against 67.2. The expected the actual came out at 63.0 against 67.2, which is the forecast. The forecast is 63.2. So consumer sentiment is just about it measures the health of US economy. Yeah, measures the health of US economy against inflation, consumer sentiment. What consumers are saying, what is their this thing as regard buying stuff. Yeah, what are they saying? Is it high? Is this thing high or low? Yeah, it measures the ability to buy something what the consumer goods. Yeah, consumer sentiment. It's a very it comes in a red color. So it's a high impact news. So all this one are just medium impact, all this brown. But the red is high impact news. This is the forecast, is the 7.2. This is you only know the relay, but then if you are a scalper or you may take, but normally if you have your structure in place, news will always fall in the structure of the market. Oh, we have here you have consumer sentiment came out at 63.2. That's bad. That is bad for US dollar because the expectation was that it will come up at 67.2 because the past value that came up was 68.1. The expectation is that it will come up closer to the past value. Now it came out at 63.0. So that is so far below expectation. It's far below expectation. So it's a worst case scenario for US dollar. So I think that's why gold rally upward. Yeah, gold rally upward against the US dollar. Almost about 578 pips in rally from today. That's too much. That's too high. Let me switch over to like 1 hour to see the possible. I didn't really because Friday is for me, so not really traded. This is slow, but internet is slow. This is by 3 p.m. This is 3. This is where it happens. The gold has been rallying since morning, since early hours of today. It has been rallying right from here. It has been rallying from Asian session to London session. Then it picked up before London session. It really picked up for London session. Wow, that's good. That's great. That's great. That's great. So it's really pick up from here, from this place. In the night, it started rallying up in the night. Now this is 3 o'clock, that news period. The news came up here. This is a 15.00. That is 3 o'clock. Yeah, the news really came up here. Let me see this place. Let me see this place. See this place. So let's see this place in 15 minutes. You see the zigzag. Yeah. Wow. You can see it in 15 minutes. So under 1 hour, we have what? We have this is the breakout of SNR. But in 15 minutes, we have this zigzag. You can see your DC. If you have come up to this place, this is rally based rally, right? So that means if you have come here, you just circle out your DC, your engulfing. This is an engulfing. If you want to use a engulfing for this is a engulfing. And what you do is set up your sell or your buy. You are buying. Use a engulfing before this one comes in. Before this one comes, you have gotten this engulfing here as a zone. So your this thing will be here. Your buy will be here. Your buy will be there. Then your stop loss will be below here. Yeah. So your first take profit will be the high of this place. Yeah. Because it's coming to, if it comes here, you relax back but before then, something was so, it sparks higher. It did not even give room for this thing at all. It sparked higher above this. See this SNR. It took out this SNR. It was fresh. It took out the SNR. It took out this one too. Took out this one too. Can you see it? It came down before it started going up. It came down. So if you have that knowledge of say when this thing comes down, he opens here. This is open and close, right? And this was the previous open and close. Price break through it. It came down. This is during the news now. It came down. It came down. In the next another session, he came down. It opened. This is exactly what he did. He did like this. It opened like this. Then he first came down. You know, I told you that when price is going to, if price is going to be up, that means once ever go down, it comes down to create this place. It first came down, then it started moving higher above the opening price. So what do? You will not pity it at all. You just set up your DC before now. You have said this and it closed above. It closed above here. You went to create another high, then comes down to close here. So it hit your DC now. It hit your entry was trigger. If you have settled, you have seen this. This is a good engulfing. This is a good engulfing zone. This is a engulfing zone. It hit your trigger. This is your stop loss. What? How many pips? How many pips? How many risks are we taking there? We took that is 43. We can still take it lower to see more comfortable this thing. If you take it lower, wow. Inside the same inside that that 15 minutes engulfing, you can see we still negotiate lower. We still negotiate lower to get this. Inside the zone, we get this. We get this. See price move into this. This is what this is a good. This is a good smartness. This smart. This is SNR It hits that SNR. Then how many pips stop loss there? You take, that's almost about 27, from 42 to 27 pips. It's good enough. It's okay. That's this 3 minutes. It's okay. 27 pips. You can imagine from 27 pips. Oh la la. You can see the way we scale it. We refine. This was 15 minutes. This was 15 minutes zone. We take it lower to 3 minutes. This 3 minutes. 3 minutes. We refine another Goffey inside the 15-minute zone. We refine another Goffey. It's pull into it. It trigger your DC. So you set the stop loss. The stop loss will be here. This is stop loss. Your next target will be what? Here. So what is our scaler first? What do you have as a scaler to this place? How many pips? We are almost about 90. Wow. So the high of that place, we have almost about 109 pips. Using 27 pips to get 109. What's our risk reward ratio? To see how profitable it is. 109 divided by 27 equals 4 times 4. That's good enough for you. As it comes to this up here, as the price comes to this up, you close. That is tactics. You close your DC. You close your what? You close your stop loss to this place. You close it. You close the gap so that you will not be too, your DC will not be too DC. Yeah, you are not too exposed to risk. You circle out 109 pips immediately, cash. But if you get like 5 trade, circle like 3 out of 5. Allow it to extend it to the rest too. You circle 109 times 3, 109 times 3, 109 times 3 times 3 times 3. That is 327 pips. 327 pips. How many this thing you use there to 327 pips? I'm just showing you the possible way you can get a very good bargain. Low risk, high probability trade. Times 3. 327. Then you have under that 3 trades that you scale out, your risk there is 81 pips, and you have 327, what 327 as a profit that you scale out. 327 divided by 81. That stands 4, right? That stands 4. You got, and this is a zero drawdown because price does not come down. Immediately price move higher to give you that 109 straight, sharp. This is 3 minutes. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. That's how many? Is it up to 1 hour? Trying to calculate it in 1 hour. Let's take it to 1 hour. Let's see it. Can you imagine? Just in 1 hour. It's not even up to 1 hour to you for where you get to, for you to get that stuff there. It's not to 1 hour. Oh, sorry, it's 1 hour. Okay, this is the top of that. This is the top of that. This yeah, it's 1 hour. Only one candle has given you that 109. You see, 1 hour. This is the top of this high. The top of this high you are targeting, and it blast higher, and it came down again. Can you see? You will enter another good opportunity for you to enter what? To enter. And now, if you scale this place out, if you scale out that profit, you can imagine, or maybe probably you close the whole this thing. You want to re-enter. You are looking for a pullback. You enter a new pullback. You see a new pullback here. See it? The market closed here. It go back to give us another gap. You go to 15 minutes. You will see the pullback very well. This is it. See the pullback. Go lower. Other 5 minutes or thereabout to see another leg of pullback. See it. So how do you trade this one? You circle out when you go to a failed engulfing. This is it. See it. You circle out the failed engulfing, and you break out of it. You take out the failed engulfing there, you pull back into this, you set up another buy. From that place, from this place, that you enter your buy, new buy, you've got almost another 55 pips. You've got from this place to this place 109, then higher. This is that news. That news. What that news will have given you? That US CPI. This news CPI that happened here. Sorry, consumer sentiment. Yeah, this is a consumer sentiment. That's the proper way, the best way to trade news. You don't gamble. You don't gamble news. If you gamble news, you gamble your capital. You follow the structure. Follow your trading plan. The news came me, it sets it up according to your structure. Can you see the news follow the structure? Because the news says that right now, dollar is weaker than gold. Because of what? Because the outcome of that news was negative. 63.0 as I guess 67.2. It was negative. If it is higher than that means if it is higher than 67.2 or thereabout, or maybe it is at 67.2, the same thing people forecast. That will have been positive news for dollar. Gold will fall. Because if dollar is going up, gold will go down. If dollar is coming down, gold will go up. That is it. So use that. You can use that information to trade on Euro USD. Because the same way, Euro USD and gold and gold USD and Euro USD, they move in the same direction. Yeah, you can say trade the same way to trade pounds and USD. You can use the same thing to trade Australian dollar and USD and US dollar. If you switch to Euro USD now, you see Euro USD will be going up. It will be going up because of what? Because the pair arrangement. Where dollar is, dollar is in the second this as a counter currency. Euro is a base currency. The same way gold is a base currency, USD is counter currency. So USD will be going down while gold will be going up. So exactly what happened here now. So you can imagine you have used this system of engulfing, using your engulfing knowledge and this thing, your refinement to a lower time frame. So I give you the opportunity to do what? To probably to scale to a lower risk level of entry. And what will be your next level of target will be the next high above you if you are buying. If it is selling, it will be the next low below you. So when you come to training plan, how do you enter trade? How do you set your type profit? We master that very well. I'm just using this storyline to discuss how do you use storyline to get your direction in order to know what to do. Even when news comes, you see fall in place for you. So you are not afraid of any news. Because you are still buying right from here, all these places, you are still buying because of what? This place, this place. This is what? This is breakout. And price pulled back into it. Breakout. You see it? As you see that breakout, you circle the base. This is rally base, rally. That's rally base rally, like this. Like this. You see it? And price, this is the base. Price pulled into it and it bounces higher. So you are going to use this as a base to take your distance. Your stop loss will be here. Your distance will be in that place. Your entry point long. Put your stop loss. Your entry point will be here. Your distance will be here. So your take profit target will be the next high. The next high in the past. The next high, like something like this. You can measure. You have to go back, or you go to a higher time frame. Next level of a higher time frame to set your take profits. But your entry will be what? Your entry will be at this zone. Then your stop loss will be here. And price pull into the inside the distance. It hits the distance here. It trigger your entry point. It does not hit your stop loss. Can you see it? You can imagine how many pips you have used here. How many pips? Let's measure the pips. 17 pips. So you have used 17 pips. You have used 17 pips to get how many pips to that top? This is 213 pips. 213 pips. 17 divided by 213. 213 divided by 17 pips That is wow. Times 13. Approximately 13 times 13. So for every $1 you put it into this stop loss, you are getting times 13 of it as a reward. Is that not too good? As a reward. There's no drawdown at all. It just went up straight. After the entry, the thing does not come down. Can you see it? It just went up. Only two candles. 10 minutes. No, 1, 2, 3. 15 minutes. Just 15 minutes trade. In 15 minutes, it has achieved you 213 pips. So you can imagine if you use your DC, if you use your DC, your standard lot size of 1.0, that's $170 risk to get what? To get to get 213. That is 200. That's what this is your gain. 2,113 times. Even if you use 950 dollar rate. Oh shit. $2,130 pips, $130 by 950 in 15 minutes. So why many people are rushing to forex trading? Bros, you see that people will say it is not possible. It's possible. You don't have to struggle to trade every day. Just see a good setup. Just see a good setup. You go for it. 2,023,500 in 15 minutes. People think you do richer. You did so good for it. See it. Just see the setup. Set it up. Enter your entry point. Put your stop loss here. Leave the down because the one you are looking at it, you think it's coming to hit the stop loss. If it hit you at 17 pips, if it goes to your favor, 213 pips. And this one will still up. When it went up, it still came down to give you an opportunity to redo what to re-enter because this is a gap. You see, this is a gap. This is another rally-based rally. If you switch over this thing and you see this thing as this, if you go to a higher time frame, you see it as this. You see it as open and close. You see it as this, like this. And price came into that zone. See it? So that when you refine it, you will get a rally-based rally. And price will tap into this and move higher again. So all these are just your re-entry. This before the news. This happened before the news. Before the news, you must have moved your stop loss. If you are still in trade, move your stop loss from here. You move it close it to this level of this place. Close it there. You have circled out some profits. Because it is not possible. It is not ideal for you to leave almost about from here to this place. You allow the price to come inside again. It's your profits out. Exit out. Because you are a scalper. You are not a positional trader. You are a scalper. You want to wait for another opportunity for price to retest. Then you enter. I don't see anything that is this here. It's just a matter of being bold. Don't be afraid of loss. Don't be afraid of any this. Maybe I will. When you see this up, try it. Set up your this. Leave it. If it hits you out, 17. If it goes in your favor, that's it. But no matter how worse it is, at least it's a matter of probability. Out of 5 trades, because you are working on a trading plan that has a minimum of 60% win rate. So automatically, if you have 5 trades in a week, do not do 3 will go into your DC. 3 will go into win. 2 will go probably 2 go into losses. If 2 go into losses, 17 pips in one. The second one, maybe you see another second one, probably maybe 20 pips in risk. And your take profit is what is all minimum of times 4 or times 3. Calculate that. You can see that your risk reward ratio will still pay off for you. So if you lose one, or 2, maybe while you don't lose more than 40 pips. 40 pips. But what of if the 3 that you hit that hit your take profit? 213, maybe one is 190, one is 109, another one is 109, 213. Calculate that. That's over 300 pips compared to 40 pips. Compared to 40 pips, you lose in the trade. That's a high probability stuff. So that is it. So the business is all about probability. You trade in terms of probability. You don't trade in terms of where no. In terms of probability, when you see a good setup, put it. If one does not favor you, the next one will favor you. So that's how to trade. That's how when we come to, we will go deep into, we will do so many examples how to enter your trade using what? Using this setup of when you see this in a higher time frame, when you get a level in a higher time frame, that's a narrow level, then you do what? You take it lower. Take it lower. Take it lower. So when you take it lower, you see your zigzag, drop, base, drop, or rally, base, rally. Then at the base, mark out the base. Price must fall into the base. If you don't use, if you don't fall into the base, use another strategy. You will learn about 3 strategy or 2 or 3 strategy. In case if this does not work, because not all the time price will fall and hit the base, so that there will be something that will make it not to come here. When you talk about it will come to another level of a method. Yeah, we introduce you to that. So that if one does not work out, the other one will work out for you, and you leave the trade. Like this place now, this place. Let me circle this place and see. See, this is this thing, right? Let's circle it out and go to, like, we go to 1 minute. That's 1 minute, 1 minute, 1 minute, 1 minute. See it? Wow. See the 1 minute. Can you see? Give me rally, base rally. Exactly what I told you. So no matter if you refine, open and close, it must give you what? It must give you that's why we call it gap, a hidden base. There's something hidden in a lower time frame that is not obvious in a higher time frame. That's what we call a hidden base or a hidden or a Goffey. So if you draw this place forward, you draw this place forward, draw it forward, you draw it forward. Can you see it? But because if you are too click to that, is it 5 minutes, you'll not be able to see this. And it give you circle out this place, see this place, see this place. This is how to what we call refinement. You circle it out. You can imagine how many stop loss you will use. This is a secret. 80 pips. You use 80 pips to get what? To get 80 pips to get to get that 200 or something. 80 pips. Oh, let me remove this. So when you see every open and close, very fantastic, my brother. Very, very fantastic. Just refine it. You will get a rally-based rally, or if it is down, you will get a drop-based drop. Thank God you have that knowledge. It's not new to you. Just refine it. You will get it. If you don't get it, don't trade it, because you may not know where to put your stop loss. But if you take it lower and you get a hidden this in there, you get the base. You can circle out the base. You have won the market. You have won the market. If it can allow you to circle out your base, you have won the market. Oh, seriously, he's doing funny things. Oh, God. Where is it? Where is it? of we are just about 6 minutes. 6 minutes. This where is it? I want to show you something. I want to show you. Okay. Well, we are here, right? We're here. And this area we are talking, we're discussing. Is it this place or this place? This place. So when you see an open and close, when you see an open and close like this, what you just do is you mark it out, mark it, mark it, mark it, mark it, mark it, mark it out. Let me remove this. Mark it out. Mark it out. Down, go lower. This is 1 hour. This is 1 hour time frame. You can't 30 minutes, 15 minutes. Let's go to 15 minutes. You can't 2 times lower. That's under my manual. Listen. Under 15 lower, you see this zigzag. You come to, can you see it? This is it. This is the tap into it. The tap into this. Let me remove this thing. This thing is costing. Okay. Okay, you see another, there's another gap here that forms in this. As well, I will see take it lower. I want to see take it lower. I want to see take it lower. So, like, this is 15 minutes. Let's take it to 3 minutes or thereabouts. Yeah, you can see it now. You can see we take it to 3 minutes. Because we take it to 3 minutes, it gave us an opportunity. Oh la la. See it? Zigzag. Rally, base, rally. And price pull back into it. Very simple. You circle out this place. This is the base. You may do it like this. But if you want to be smarter enough, I will just, if I want to do my, I'll just do it this way. I'll just do it this way. That is it. And forward, you can see do this. You can see also do this. You circle out this place and price tap into this place, and you. This is a breakout of this, and price come back into it. You can still use this one to re-enter if you miss this one. But this is the most perfect one. The most perfect one. I give you good this thing. So it nearly come down. Somebody will be fear. Don't be afraid. If he hits you out, how many pips are you going to lose? If he hits it out, how many pips are you going to lose? You're not going to lose more than 17 and 19 pips. Don't be afraid. Don't be afraid. You need to always live to trade another day or another time. If you miss it here, it will hit you here. It will hit you in here. To take you in here and straight. There's no drawdown. It's move up higher. You circle another this thing. Circle another this thing. This is it. See it? This is a golfing. Circle it out. If this place take you out, in case so maybe it came down more than this, and he never did. It came down like this more than. If it comes down, you see the opportunity, another opportunity for you. You set it up. How many pips? Again. So when you know what to do, you are not afraid of anything. This is 16 pips. 16 pips, he hit you out. I mean, he hit your DC in a good manner. He hit your 2 minutes. So this will be your stop loss. Sorry, that will be your entry price. Here will be your stop loss. So we are taking just extended by 4. So your minimum distance should be 4. 4 or at most maybe 3. So let's use 4. This is 4, 4, 4, 4, 4, 4, 4, 4. You must know how to use the trading view. It will help you. When we will talk about that and we discuss about that. Trading will help you to measure how many your risk level, your this. Yeah. So that you go to your MetaTrader, you enter your trade. So now you have entered your this here. This is how many stop loss. Your stop loss is just 16 pips. This is it. Stop loss 16 pips. Can you see that in trading view there? Stop loss 15 pips And your target will be what? Your target will be 69. 69. See it up there. 69. Because you are using what? A risk-reward ratio. Risk-reward ratio of 4.3. So for every $1, you are getting times 4. That's what it translates. And the price move. See it. How many minutes? Just 6 minutes. This is 3 minute time frame. It moves in your favor. Your stop loss is not hit. As it moves in your favor, zoom. Because you are coming to enter newly here. See it. This is another rally-based rally. You circle this one out to read this one, and this one will enter your trade again. Newly, see it. Exactly. Oh God. See it. Circle it out. It moves. Zoom. Circle this place out again. That's how you scale, 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 you scale out, you enter new trade. Please don't we will come into this trading plan. You will enjoy this more there. Just focus on this first. Analysis.